Today in crypto, I want to share my portfolio with you, how it has changed since the last time I made a portfolio update video, what are some new gems that I'm watching, as well as new strategies that I'm using for growing my portfolio in the months and years ahead. The market is changing super fast right now, and we as investors must stay on top of the latest trends in the market or get left behind on the gains train. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wide world of crypto. By the way, members of Wealth Mastery will be receiving this week's report on Wednesday at 8 p.m. Eastern Time. This week, I'm covering knowing when to cut a loser from your portfolio, the latest token sales. Heidi has some tips on how you can keep your privacy when using cryptocurrency. Jesse has a report on the new and very, very much hyped Polkadot player Staffy. Forrest is doing comparison of top oracles, Chainlink, Band, and Telor. The team from Matic joins us to discuss Layer 2 DeFi and how they are approaching this fast growing area of the market. DeFi Dad is doing a deep dive on Cream Finance, which is a big DeFi player right now. And Rect Capital, of course, shares the most critical insights on Bitcoin and top trending altcoins. So if you are looking for insider tips and cutting edge research on the market, then let me and my team save your time and help keep you ahead of the curve. There's a link down below in the description where you can learn more about becoming a member of Wealth Mastery. And of course, before we start this video really in depth, we have to have a quick disclaimer. This is just what I'm doing with my personal portfolio. You need to make your own decisions about what you are going to do with your portfolio, but maybe you can gain some lessons off of what I'm doing, or at least just have a sounding board for your own ideas by watching what I'm doing with my portfolio. Also, if I don't own your cryptocurrency, then please don't get upset. It's going to be okay. I can't own them all, guys. There's a lot of great cryptocurrencies that I don't own, but which I like. So, just keep that in mind. And so without any further ado, let's get this. Number one, of course, is Bitcoin at 22% of my portfolio, which is a big change since last time when it was 40%. Long term, my ideal number is 50% of my portfolio. Now look, I have been actively adding to my Bitcoin stack since I last made a video on my portfolio, but since then, other positions have just increased by so much that Bitcoin appears to be a much smaller percentage, even though the total amount of Bitcoin that I own has actually increased over the last few months. That, of course, is because we are seeing an altcoin trend right now. We're seeing big gains for altcoins. Now, in terms of what I am doing with my Bitcoin, well, I have around 20% of it sitting in my trading account, around 40% on my hardware wallet, and I'm lending out around 40% across 3 different platforms: BlockFi, CryPTODOTCOM, and Yearn Finance. Now, I am actually toying with the idea right now of moving some more of that Bitcoin out of cold storage, wrapping it, and putting it into DeFi. Obviously, there is more risk involved with doing that, and there's not a recommendation for you to do that. Again, this is just what I'm doing with my money and what I'm potentially thinking about doing with it. But the rewards, I think, could be worth the risk at this stage. Nevertheless, I will continue to bank profits from other crypto plays into Bitcoin. But I am investing much, much more heavily into altcoins and token sales right now because I think that is where the money is going to be made. Honestly, though, I do need to do a bit of rebalancing to my portfolio to get my percentage of Bitcoin back up higher. But this is going to come as a natural part of the process as I continue to take profits from altcoins and cycle them back around. Number 2 of my portfolio is USDC at 14%. Now, this has actually grown to be a bit bigger than I would usually want it to be as an ideal percentage, but I have been taking profits on a few different positions, and so my USDC position has grown quite a lot as a result. This, by the way, is almost all being used. It's not just sitting in a wallet somewhere. So I'm using it in lending. I'm using it to farm yield. So it's on BlockFi, CryPTO.com, and again, Yearn Finance for earning yield, all with my USDC. Now, this is currently very, very lucrative. The rewards are insane. And while the rates remain high, I'm going to remain heavily deployed with USDC, making those dollars. I'll be doing more yield farming over the coming months. I did just move some of my USDC into token sales as well, so I am also using it to invest in these early stage projects. But profits from those sales, again, they're recycled back into USDC, back into Paxos Gold, back into new sales, and of course adding to existing positions like Bitcoin or potentially something like Ethereum or Polkadot. Which brings us to number 3, Ethereum at 13.5%. Now I'm going to keep adding to my Ethereum position, even though I have not added a lot to it in the last few weeks, as I've actually been working on and will continue to work on building a Polkadot position by dollar cost averaging to that. And I do also have a few Ethereum denominated trades in play right now. So they're not actually super far off from hitting their targets. So I could see this percentage of Ethereum increase a bit in the coming weeks as those trades, hopefully, fingers crossed, play out in my favor. Right now, around 90% of my Ethereum, though, is deployed either in trading or via BlockFi, CRYPTODOTCOM, and the Earn Ethereum vaults. I'm earning some very nice Ethereum rewards right now as a result of doing that. I am going to continue to do this with my new Ethereum as it comes in from these different opportunities. The lucrative rates on offer right now also mean that I'm really going to think twice and potentially not even be one of the early Ethereum 2.0 stakers, since all of my current platforms that I'm using for earning Ethereum allow for quick liquidity. I can get my money out at a pretty short notice if I need it, whereas with ETH 2.0, that's a one-way street, man, so something to keep in mind. Now, the next 3 on my list here might be a bit surprising. Number 4 is Elrond, of course, now rebranding as eGold. That's at 9.5% of my portfolio. Now, the crypto, formerly known as Elrond, has absolutely skyrocketed since I entered my position on it. I have taken out my initial investment, and I remain in the majority of my position at this time. I'm personally very bullish on eGold moving forward. I do not plan to sell it until it has a market cap in the billions. Honestly, you need to think about it like this. If Icon hit $5 billion for a market cap last bull run with no working product, then I see really no reason why Elrond, with Samsung wallet integration and a huge growing DeFi ecosystem, could not reach $3 billion or beyond in terms of market cap, which would be a further 10x move from here. I'm going to be taking a big chunk of profits out when it hits that level. Number 5 on my list is TrustSwap at 6.5%. Now, I got a good entry on this newcomer back when it just hit the market. I've actually taken profits on it twice, getting back, of course, my initial capital and about a 4x return on my initial investment, as well as keeping around half of my initial position for a moonshot. If it moons up, awesome. If it goes to 0, I made bank on it. It's all good. But considering all the powerful applications being built out for TrustSwap right now, I think that this actually has a lot of room to run still. And of course, depending on how lucrative the rewards actually end up being, I may hold on to this for a longer period of time. But I still would consider exiting my position if we close in on that $1 billion market cap zone, as the gains ROI-wise would be insane by that point. Number 6 is Kava at 4%. I'm very bullish on Kava, have been for a long time. And of course, the entire Cosmos ecosystem in terms of DeFi. I have even invested in a new Cosmos ecosystem player, but more on that in a minute. Now, I believe that Kava is going to go way higher in terms of market cap in this bull run and will hold I'm planning on holding basically my Kava until it's a multi-billion-dollar market cap crypto. Until then, I'm staking it, I'm chilling, letting it play out. Number 7 is Cardano at 4%. Finally getting those sweet, sweet staking rewards. Been long enough. It's great to get, though. Looking forward, of course, to the smart contract release coming up later this year, and of course, the birth of a Cardano ecosystem. Cardano, I fully believe, is going to hit new highs in the coming bull run, and I'm not planning on selling it before then. If at all, I might just sit back and collect my rewards for years to come, assuming that the ecosystem turns out to be what it is hoped to be. Number 8 is Ethereum Oracle provider Telor at 3.5%. It's actually the only Oracle play in my stack here. Now, this, of course, is backed by BINANCE and Consensus and has enough hype building around it. And, of course, Oracle hype overall continues to be a strong trend. And I think we will see that hype continue to build basically around all Oracle players. But I have been considering adding DIA to my portfolio to expand my Oracle exposure. I haven't pulled the trigger on it yet, but it keeps cruising around my brain, so one of these days I probably will. Now I'm fully planning to sell Telor when 1 Telor equals 1 Ethereum, and I'm going to walk away a very happy man if that happens. Number 9 on the list is Synthetic, 3.5%. Now this is a DeFi power player with some sick staking rewards and painful staking claim fees. Sort it out, guys, seriously. Now I believe that Synthetics is going to do at least another 10x during this bull run. Big Synthetics fan, but inevitably at some point it will probably get on the chopping block and be sold. Next up is BZRX at 3%. Now this is a big DeFi hype player with some potentially very sick staking rewards, leveraging access to 2 different DeFi platforms. I believe it will be a multi-billion-dollar market cap cryptocurrency during this bull run. I will, of course, be watching for how lucrative the staking rewards actually are before making a decision on selling it or not. But yet another platform exploit this week is definitely not a good look for BZX. Number 11 is Reserve at 2.5%. The Peter Thiel and Coinbase backed stablecoin beast, I think, has a lot of room left to run. Seriously, we haven't even got the Coinbase listing for it yet, and we will. It's just a question of when. So I'm hodling it for now, but I do have a sales target in mind, and I will sell this token when it hits that target. I've already taken out my initial investment here, and I've made some profits on it as well, but I still have around 66% of my position in reserve. Number 12 is Polkadot at 2.5%. Now this is a big cap cryptocurrency, so I'm not expecting insane returns on it. But I am super bullish on the future of Polkadot, and I will continue to average into a position in Polkadot over the coming months. I see that Polkadot could easily hit $100 or more during the coming years, so getting it around $4 or $5 is a sweet treat. By the way, you may be thinking, why is Polkadot such a small percentage of my portfolio if I'm so bullish on it? The answer is really quite simple. I'm dollar cost averaging into my position. It's probably going to be around 10% of my portfolio as a, goal towards that. So I will continue building over the coming weeks and months. And I'm currently staking it on Kraken, getting those sweet staking rewards. Number 13 is Kyber at 2%. Now this DeFi exchange token is actually a decent little earner so far. So basically the plan is just sit back, chill, and keep collecting rewards. Not much else to report here except good work, Kyber. Enjoying the rewards, man. It's great. And at number 14 is Monero at 2%. Old boy Monero, really not doing much right now. Still holding on to it. I still like privacy as a use case, but there is part of me that's tempted to kind of just, sell it for cash, deploy that capital into a high yield stablecoin position, get some sweet returns. But I do like privacy though. I do like the use case, but I also like making money. Tough call. Something for me to think about. Haven't made a decision on that yet. Number 15 is Tomo Chain at 1.5%. Now look, they've been doing some really cool things recently, but I think Tomo just kind of lacks that buzz that a lot of other chains do at the moment anyway. But I think it will continue to make some really strong price moves going forward. I, of course, do have a sell order in place for this, and when we part ways, it'll be as friends, with me walking away with some sweet sick gains. Number 16 is Paxos Gold at 1.5%. I'm going to continue taking profits into Paxos Gold as part of my profit-taking strategy. So every time I take profits, I'm going to put a few percent into Paxos Gold. I'm currently lending out my Paxos Gold via CRYPTODOTCOM and BlockFi, so earning a few percent a year on my gold, which is totally freaking sweet. I will continue to add this into my portfolio as a form of taking profits for the foreseeable future. Number 17 is Phantom at 1%. Now, I've had a small bag of this for ages. In fact, last time I made a portfolio, but I didn't include it because it was such a tiny percent, but it has seen a big recovery since then and have been collecting those staking rewards since that time. It has been getting a lot more attention recently. I will look for a sales target on this when staking rewards are unlocked. A lot of other people might be as well, so you can see some big sell pressure there, but nevertheless, it's there. It's chilling. Number 18 is Mantra DAO. Now, this is at 1% as well. This is a new Polkadot hype player. I'm going to be holding this for a little while now. The staking rewards are pretty big, and they have been getting a lot of partnerships. I do have a sales target in mind for this, and I'm actually looking at a few other Polkadot ecosystem players to add in my portfolio, because this is really the only one. I got Polkadot, And I've got this. ChainX is on the short list, though, for ones that I might add in the coming future. Now, at number 19, we have some super tiny fractions at this point, all less than 1% of Nash, Beam, and Ergo. Finally got those Ergo tokens after ages of waiting for them. Got sales targets in for Ergo and Beam. Nash, though, has been doing some very big things recently, so perhaps the rewards will start picking up in the coming months enough to make it worth holding on to for a longer term. They've definitely been putting the work in, so we'll see how that plays out over the coming months. And number 20, utility tokens, which I don't actually count in my portfolio, but I do own them, so I'm going to mention that. Number 1 is CRO, the Crypto.com token, enough for staking my Jade Green debit card. Number 2 is the BNB token, enough for using the BINANCE exchange. And number 3 is BitMax, collecting some small rewards over on their exchange. And the final thing that I have been doing, which represents a really, really big strategy shift for me, is token sales. I've been buying token sales. It's crazy. I went 2 years with only investing in like 2 token sales. It was crazy. Why would you invest in token sales last year or late 2018? But in the last month, I have invested in about half a dozen token sales. So I have invested in or am investing in the following tokens. Siri Network, which is a customer relationship management enterprise play backed by some of the biggest names in crypto. This is actually one of the ones that I invested in like over a year ago. Kira Network, which is a Cosmos ecosystem player in the DeFi space, very bullish on this one. Upbots, which is the Alameda-backed bot platform with rich trading features, including bringing bots into the decentralized exchanging space. Power Trade, which is a Bitcoin options trading platform for retail. Polka Starter, which is a cross-chain DEX built on Polkadot, and we all know how exciting the Polkadot ecosystem is. Injective Protocol, which is a layer 2 DEX. Layer 2 is going to be big, guys. Keep an eye on it. Oasis Labs, which is working on decentralized data privacy. And a couple others are on the short list, the ones that I might. But you got to keep this in mind. Token sales are super high risk, guys. And I don't want you to think that they're awesome just because I'm buying them. I've been burned by so many token sales, some of them incredibly bad last season. So I go into this with my eyes wide open, and I fully expect to be burned bad by some this season as well. But that being said, the ones that did moon last season mooned super hard and more than made up for the losers. But still, it is a dangerous game to play because there's so much that can go wrong in a token sale. There are a lot of high quality offerings coming up. I'm going to be trying to get into quite a few of those as well, so I'll probably be in a dozen token sales by the end of the year. But anyway, that's just my portfolio and what I am doing. I would love to know what is in your portfolio. What does your portfolio look like? Are you heavily invested into DeFi? Are you heavily invested into Bitcoin? What are your percentages? Are you getting into any token sales right now? Are you doing lending? Are you doing yield farming? I would love to know how you are approaching your portfolio down below in the comment section. Thank you for watching today's video. Long live the blockchain, and peace out till next time.